Good afternoon or good morning, everybody, depending where in Australia you're joining me today. Thank you so much for connecting to this webinar today, all about knowing your client, a practical guide to due diligence and risk management, brought to you again by Ignition. Now, knowing your client is a key part of onboarding anybody into your firm as a new client or a new customer. And it's something that when we're rushed, we often sort of bring the client in really quickly and try and dive straight into the work, especially if there is some critical items we need to delve in for the client straight away, if they have anything overdue or they have any pressing matters. However, with the closer focus on onboarding and making sure that we know our clients and we've done really good due diligence check, this is a part of the process we probably all need to pause, slow down and review. This is becoming even more critical as we look towards 1st of July 2026, where the second tranche of Australia's new AML regime is set to commence. And there are items in there that will impact what we as accountants have to do when we're onboarding new clients, and to make sure that we're better managing our risk and professional exposure. So there's a poll up on the screen, and I'd love to understand how many of you are currently working in public practice, and see a bunch of you have answered already, so that's great. And most people here are in public practice, like me. I've been doing this for just over 20 years. So kicking off the webinar shortly, firstly, a little bit of housekeeping. Today's session is going to be recorded, and a copy will be sent to you alongside any resources that are mentioned throughout the webinar. On the right-hand side of your screen, you'll see a live chat or an attendee chat. I encourage you all to hop in there, chat to each other, and ask questions in regards to what's going on the webinar. However, if you do have a question that is directed to any of the panelists, something that you'd like answered either during the webinar if we have time, or alternatively we'll come back to you after the webinar, please put that directly in the Q&A box. It's much easier for us to track that as opposed to the chat. Okay, so as I mentioned, Ignition is bringing in this webinar today. So Ignition is the leading revenue generation platform for accounting and professional service businesses across the globe. They have 8,000 customers internationally using Ignition to automate and optimize client proposals, billing, payment collection, and workflows. And that proposal piece of what Ignition does is so critical in onboarding your clients and getting them properly engaged in your business. Ignition makes this so much simpler for accountants by integrating with most of the leading cloud-based accounting apps, including Xero, QuickBooks Online, and MYOB, streamlining all of your processes and making what could be a burdensome task much, much easier. I've been using it myself for well over a decade now, I believe, and it is fantastic, absolutely life-changing. So at the end of this webinar, we will be doing a quick run-through and demonstration of how Ignition can help you solve the engagement part of the onboarding piece, and I'd love for you all to stick around. Now, my name is Rebecca. Thank you so much for joining me today. I am an FCA and accountant. I've been doing this for just a little over 20 years now. And like a lot of you, that onboarding and getting customers set up into our firms, I understand how much of a problem that can be, especially just having a basic consistency of experience for our clients and a really enjoyable process. But now with all of our additional compliance requirements, making sure we are ticking all the right boxes the whole way through, protecting ourselves and really understanding who are these new clients that we are onboarding into our systems and what impact will they have on our businesses. So the agenda for today, we'll be having a look at AML Tranche 2, what the reforms mean and why action is needed now, so you're not left behind at the 1st of July 2026 rush. Due diligence essentials, how to assess and manage your client risk effectively. Protective engagements and how to use these to reduce disputes, scope creep and fee risk. Consistent onboarding and aligning this with APS standards and the new AML CTF rules. And streamline compliance, automating your onboarding engagements and payments with Ignition. So I'd love to kick off the webinar now and introduce our panel. First up, we have Belinda Zora McConnell. Now, Belinda is the Regulation and Standards Lead at CPA Australia. She began her professional career as a tax specialist working in accounting and law firms in Australia and New Zealand, and as a teaching fellow at the University of Auckland. Belinda has had several roles with CPA Australia, including as a technical consultant for the CPA program and professional development offerings, and as a specialist in regulatory compliance. These days, she advocates on behalf of members of the accounting profession in respect of regulatory obligations with which practitioners in particular have to comply, and the accounting professional and ethical standards which all members of the 3 accounting bodies in Australia must comply. Thank you so much for joining me today, Belinda.
Thank you very much. It's lovely to be here.
Great. And welcoming next, we have Jill Muir. Now, Jill joined the business reform team of CPA ANZ in January 2021. Jill represents members' interests in key policy areas including anti-money laundering and counter-terrorism financing, consumer data right, insolvency, and the digital ID ecosystem. Prior to joining CANZ, Jill was the Director of Advocacy with Australia's Small Business and Family Enterprise Ombudsman, having focused their career on advocating for small businesses from within the government. Thank you so much for joining us today, Jill.
Thank you, Beck. Looking forward to hearing what members are worried about.
I think that's the first time I've ever used the word terrorism in a introduction for anyone, so it was new for me. And last but certainly not least, I'd love to introduce Vicky Stillian. Sorry, I stuffed that up, Vicky. I did try. Prior to joining IPA, Vicky was a practicing lawyer specialising in commercial litigation, working in Australia and overseas. She currently holds an unrestricted practicing certificate offering pro bono services. Vicky's career in economic and public advocacy started with Federal Treasury in the finance system and business tax divisions. She holds a Bachelor of Jurisprudence, Bachelor of Laws, Bachelor of Arts, Master of Business Administration in International Business, and a Diploma of Financial Planning. At the IPA, Vicky leads a team responsible for advocacy, policy, government relations, strategic communications, media, publications, technical resources, disciplinary compliance, and co-regulation. Thank you for joining us today, Vicky.
Thanks, Rebecca, and hello everyone. Thanks for having me.
Okay, so now that we've gone through all the introductions, let's dive into the content. And first off the bat is talking about the new AML or the AML Tranche 2 regulations, which are coming in, and why it's important for us to understand what these may look like in July 2026 and how they impact accountants. Now, Belinda, what does this look like for accounting professionals?
It's important to remember and to acknowledge that by virtue of being an accountant, you are not necessarily brought into the extended regime. Instead, it's about the services you provide. So you may well be an accountant and you may well be a member of one of our 3 accounting bodies, or you may not. The fact is that there are going to be 9 new what's called designated services. And if somebody is providing even one of those designated services to the public, then they automatically become what's called a reporting entity. And a reporting entity, there's a bit in the name there, that means that you will have reporting obligations to AUSTRAC, but you actually also have a host of other obligations. And some of those obligations will be familiar. They concern things like know your client and client due diligence activities. But they look familiar to you, particularly people who have got those obligations in respect of perhaps acting as a tax agent. But the new obligations, of course, must adhere to their own rules. So whilst there'll be commonality with some of your existing obligations, there may also be additional obligations and an extension of some of your existing obligations. There's also further obligations regarding documentation, processes and policies, risk reviews and risk assessment of both your practice, whether you're a sole practitioner or part of a firm, and also risks of your clients and potential clients. And the risks being as to whether you may find yourself inadvertently supporting a money laundering activity or a terrorism financing activity. So there's detailed record keeping requirements, which again won't be unfamiliar to most people in practice, but there may be additional obligations under the AML/CTF rules that you'll have to adhere to. So many things will not be unfamiliar, but what might be the case is an extension of your existing obligations under other regimes. And then, as I mentioned, there is ongoing reporting obligations to AUSTRAC that may be as simple as the annual reporting obligations, or you might find that, in fact, your client is behaving in a manner that gives rise to a suspicious matter, and in which case you have a suspicious matter reporting obligation. And those are just some of them, Rebecca.
Wow, that sounds like there is a whole lot for us to get our heads around, and definitely not something that I'd like to wait until July 2026 to figure out. Speaking of which, Jill, what sort of risks does a firm take if we just sit and wait until 2026? Are there going to be any penalties for inaction?
Oh, absolutely, Rebecca. I've just got the figures here. For sole traders or sole practitioners, it can be up to $3,756 per day if you haven't enrolled. And once you get up to a corporate level, that becomes $18,780 per day. So significant fines if you should have enrolled or you should have actually started your program. I think I want to offset that, Rebecca, with the CEO's comments of AUSTRAC. They are going to target people that put their head in the sand. Not that that's the language you used, but in essence, if you have made a genuine attempt to get started, AUSTRAC, the regulator, will look to help you with some education and with some tools to help you improve where you're at. So key is get started now. So as Belinda pointed out, you possibly have a lot of the work already happening. Just have a look at what customer due diligence looks like under this regime. We know you're going to have to do a risk assessment of new clients. So perhaps look at your onboarding form. What's the extra bits you have to add? Key, of course, is enrolling. So look at those designated services. Our thought is don't get bogged down in the detail. There's some pretty clear ones there. If you help people set up a company, if you help people set up a trust, if you let people use your address as their principal place of business, you're in the regime. So from the 31st of March, take the time and enrol. That's number one. You've ticked a box. Then by July, you should have your risk assessment done. As Belinda mentioned, that's in two parts. One, of your practice, and two, have a process in place to risk assess new clients. Now, you don't have to do anything about the clients you already have until they seek a new service and if that service is designated. So there's not a massive burden on day one in the sense of a client risk assessment, but you need that process in place. So there's a couple of key things to get done, get prepared, and as we go along, AUSTRAC will provide us tools and resources to try and streamline that, particularly for our smaller practices.
That was very helpful, Jill. And I just to dive in and make that very clear around one of the items. So if I have a client who's been my client for 15 years, I did not do a very deep dive into checking, say, their ID, for example, when bringing them on. And if post-July next year, they've been my client for all these years, they want to set up a new company, I will dial back then and go through the whole new onboarding regime with them.
Exactly. And I think we touch on it later. That's also the opportunity to perhaps review your engagement letter and make it part of the natural business process you should already be following with those regular reviews. But yes, you will have to ensure whatever you checked 15 years ago is still current. I'm going to guess that's likely. But equally, once you've done the standard due diligence, if they're a well-known client, and if the service they're asking for is sensible and reasonable, then you can actually do simplified customer due diligence. So it may be as simple as checking and citing current ID.
That's not too onerous. Now, Vicky, what are the most practical steps a firm can take today to strengthen their acceptance procedures in preparation for the change? There's a lot of P's in that sentence.
Thanks. Yeah, thanks, Rebecca. Okay, so following on from what Belinda and Jill have already said, which I think gives people already a bit of a snapshot, preparing for the AML CTF changes, it may sound a bit daunting, but you don't have to start from scratch. And there are already lots of processes that you're probably already doing or should be doing that can be incorporated. So the AML changes and the things that have to be done should all become part of all of your processes, so that it doesn't seem like there's too much of an extra burden. So accountants in practice should already have know your client and due diligence processes as part of the onboarding process. So under the professional and ethical obligations, including APS 110, which is APS 110, which is the Code of Ethics, accountants need to ensure that there are no conflicts of interest with a client that would compromise their professional or business judgment. And under one of the other standards, APS 320, which is referred to as quality management for firms that provide non-insurance services, but APS 320, there's already an obligation to consider the integrity of a client, and that's before a client engagement is accepted. And so APS 320 refers to a system of quality management, and that describes elements of the engagement, including engagement documents, and we'll hear a bit more about that later. So those are things that are already should be part of an accountant's processes and systems. So what we're essentially doing here is adding a bit more with the AML, or I shouldn't say a bit more, but I want to make it to sound as little as daunting as possible. So it makes a lot of sense, is what I'm saying, to incorporate the additional AML CTF processes into the onboarding that you've already got for your clients that already should be set up. So the main differences will be, as Jill pointed out, identifying whether there are designated services that you'll be providing, assigning a risk rating to the client, recording it, and also having a policy and an awareness around escalating if necessary. So I'll leave it at that. Thanks, Rebecca.
Thank you so much, Vicky. Now, that was a really great introduction and really good to point out the items that we need to be not necessarily concerned about, but actioning as accountants. What I'd like to understand now is, what does due diligence look like today? So Jill, right now, if I'm engaging with a new client and I might not need to go through the whole AML process, but what sort of red flags are most critical for me to identify?
I think the simplest one is probably more behavioural, like if people are hesitant to provide information, which you probably already do. I hate to say, like, the smelly rag sort of scenario, but AML CTF takes that a little bit further. And if you understand the person in front of you is what's known as a politically exposed person, and there's a list of that in the Acts and Rules, but that'll be simplified as we get tools and resources, you then need to explore what their role is, and you will need to then clarify their source of funds for a particular engagement and or their source of wealth for ongoing engagements. Now, they're uncomfortable conversations. There's no two ways around that, Rebecca. And if someone is hesitant to give you that information, that's a good red flag. The other one, again, I think you probably do, is if they're seeking services that simply don't make sense. I'm a sole trader, I'm a mechanic, and I would like you to set up a parent company and 3 subsidiaries to manage different parts of my business and a trust to hold the assets of the business. Now that, to anyone would seem excessive for a sole trader mechanic starting out. So a lot of what you're asked to look at is, I think, what we'd all call common sense. The key under AML CTF is the need to record that. You need to record your logic. You need to record how you arrived at your risk assessment. And critically, these risks are not standalone. So if someone is hesitant to give you some identification, then they're hesitant for you to explore the beneficial owners of a company. And then they're hesitant to give you their source of wealth. They compound the risk. So one of those might put them at a medium risk, but together they become a high-risk client. Keep the record of how you work through that, what your conclusions were, and what your risk rating is. So common sense, but record your process.
Very sound advice. Thank you, Jill. Now, Belinda, this process that I go through when I engage with a new client, is it a once-off task or is it something that I need to do continuously?
It is something you need to do continuously. You will, of course, do your initial due diligence, and as Jill touched on, finding out the kind of services they want, the risk assessment you perform may mean that it's just a simple, simplified due diligence is required. However, your relationship may continue. They may change the kinds of activities perhaps they in their investments or their business carries out, and that might encourage and that will spark in you to ask questions, and that may result in some red flags or may not. You might be very satisfied once your additional due diligence and is satisfied. But as Jill said, you need to obviously document that very well. The key things to look for are perhaps an ownership change maybe in a business, any unusual activities, any change in behaviour, change in activities, and you will want to obviously discuss this with your client. As Jill said, that can be a little bit awkward potentially, but nevertheless it has to be done. You need to then assess whether your initial risk rating was appropriate. You might want to change that, you might want to increase it or otherwise, and you need to manage and mitigate any additional risks that you may come across. So yes, it's very much an ongoing process.
Thank you, Belinda. Now, Vicky, this next question's actually also been discussed a little bit in the chat, I've noticed, and that's around the impact of these new rules and the process on smaller practices. So how can they implement a good due diligence without it being too burdensome?
Yeah, thank you, Rebecca. And I think it's really important also to focus on small practices and sole practitioners. With due diligence, it's not just a case about thinking about today, but good due diligence is also very much forward-looking. And from an AML CTF perspective, due diligence is something that should be embedded in the processes that form part of the overall AML program. So it becomes part of your everyday practice, and that way it'll be less burdensome as having parallel systems, which you don't need. So part of it is building a risk rating system and a risk rating checklist, and there'll be lots of tools and resources coming out shortly. So building those into the onboarding process, as I mentioned before, and then having a really good CDD process, maintaining the due diligence and the risk log for future reference if you need it, and especially if there has to be an escalation, and reviewing it all on a regular basis. And I think this is something that that Belinda and Jill have touched on before. It's that ongoing awareness and the ongoing processes that are necessary. So, for instance, even for a small practice, having a risk matrix to help guide you through the process and assessing whether your clients are low, medium or high risk, let's say. So if the clients are low risk, you go through some of the basic checks and those could be enough, and right through to more enhanced due diligence for higher risk clients. And I think a lot of smaller practices will have a pretty good idea of what their clients are about. They may have had a long history with them. They know what kind of work they do for them. So, for example, some of them might be local. If you've known them for a long time, let's say if they've got a straightforward transaction history, like if you've been doing their tax work for a long time, then these clients might be considered lower risk. And then, for example, if the client comes to you, and I think Jill touched on this before, and they come to you and they've got complex ownership structures, they're asking you to do something that involves foreign entities and so on, then they're more likely to be considered higher risk. And of course, it's perfectly okay to say no to a client, especially if they're acting evasively or a bit strangely. So all of those checklists and templates are something, and there will be more and more of those coming out. And I think there's already lots of tools and resources hitting the market. I think we're all getting messaged by people saying, oh, look, we've got tools and resources. And part of the role of the professional associations will be to assess some of those tools and resources, which we're all doing. So there will be a lot more coming out, and there will be certainly a focus to help the smaller practitioners. Thank you.
Thanks, Vicky. That was a great overview of some of those items that we need to get ready for. And what I'm hearing, particularly around understanding the risk, and it's some of the things that we do here, to not be afraid to say no to a client if they're not the right fit for you. If their risk profile is just too much for you or your firm or where you're comfortable at, and then say no. But also well before July, understanding what is your personal and your firm risk profile, I think is going to be a really necessary part of this profile.
Yeah, absolutely. And that's something that a lot of practices, including sole practitioners, should already be aware of. It's something that's already required under the professional standards.
Thanks, Vicky. Now we're going to move on a little bit from there and talk about some building compliant and proactive engagement processes, which is also part of the onboarding process and really setting those rules of engagement with your clients and revisiting them. Belinda, why are engagement letters so critical to the onboarding process of new clients, and has this changed at all since the TASA Code of Conduct update?
Right, yes, it has actually, but I'll get to that in a moment. You'll all probably be aware of the APES 305 Terms of Engagement Standard, and that requires members in public practice to document and to communicate, so in other words, in written terms, the terms of the engagement between themselves and the client. And that's for very practical and contractual reasons. It helps manage the expectations between the practitioner and their client, can obviously protect both sides against situations of dispute, and there actually might be some legal obligations that may need to be provided in written form, in particular if the member participates in the professional standards scheme, for example. And you'll find that APES 305 can give you a lot of guidance in terms of the engagement letter. Engagement letters should most certainly be looked at on a very regular basis because things can change. And the TASA determination last year is one very good example of that. So those of you who are tax agents will be very aware of the talk of the town last year was the Tax Agent Services Code of Professional Conduct Determination 2024. And that set out a number of new obligations which applied in addition to those already sitting in Section 30 of the Code of Conduct. One of these obligations, which is at Section 45 of the determination, is that tax agents are obliged to keep their clients and prospective clients aware of a whole lot of different matters. These are all matters that would make a difference or contribute to the client determining whether they want to engage with that practitioner or want to continue an engagement practitioner. These obligations include the tax agent's rights and responsibilities, but also the rights and responsibilities of the client. Certain things such as whether the tax agent's registration has been suspended in the last 5 years, and whether they've been subject to any disciplinary procedures, whether they've been bankrupt, and so on. And when this determination first came out, there was a lot of discussion about how to communicate that to both current and prospective clients, and it was agreed with the TPB that to include in the engagement letter was sufficient notice and sufficient way to communicate. So yes, it absolutely has changed, and that's just a really good example of being aware that you need to be constantly on top of your engagement letters, and you need to revisit your templates on a regular basis to make sure they're adhering with your obligations.
Thank you, Belinda. And just as a quick reminder for everybody, IPA, CPA, and ANZ all produce engagement letter templates for their members that are updated regularly to align with any of the changes that are occurring. So please reach out to your member bodies or have a look at your online resources to access them. And we will also show you a little bit later on how you can find those in Ignition as well. Now, Jill, when we're still talking about engagement letters, what are the non-negotiable elements that should always appear in our engagement letters?
Well, they haven't particularly changed, Rebecca. I think it would probably come down to how you deliver this information. It's quite common now to have an engagement letter that's the core differences with that particular client, and then your engagement terms, and including things like Belinda pointed out for TASA in a brochure that you can hand. So if I can talk to the letter for a particular client, that hasn't particularly changed. It's the name, it's the scope, it's each person's responsibilities, it's the privacy, it's the outputs, it's your fees. So those things that, again, you want to avoid disputes over, and you want to ensure your client understands and accepts them, hence the written form and the client signing off on it. Where the AML CTF may be a consideration is, do you want to put that into your terms of engagement? You may, for example, want to put in, these are designated services, and list the 9 services. You may want to put in the covering letter for that particular client. If the services you seek change and they're captured under the AML CTF regime, we will have to do further identification. So for me, that's some of the considerations. And I would just add to Vicky's point about tools and resources. The regulator AUSTRAC, particularly for sole traders and our small practices, are going to release a kit. Now, we've been advised that we're expecting it to be, you put in your practice's details, it'll have a risk assessment formula for you, and that will become your initial program. So there's potentially some paragraphs in there or some items in there you may want to bring into those engagement terms. But in essence, be very clear who you're providing your services to, be very clear what you're going to charge them about it, and be very clear that you'll revisit that if something changes.
Thank you, Jill. I do like that idea of notifying your clients about potential AML and CTF issues, particularly your long-standing clients. If you are re-engaging with them regularly, this is a good opportunity for you to put that in the letter and address it with them, to give them a heads up that if something changes, the way that you would normally deal with that might be a little bit different moving forward. Now, Vicky, if you're still using a very boilerplate engagement letter, which it doesn't go into the level of detail that Jill mentioned, it might just be something very generic, such as, I'm going to engage with you and be your accountant and tax agent. When these don't reflect the actual detailed client circumstances and services, what are the risks to the tax agent or accountant using those sorts of letters?
Yeah, there are actually lots of different risks that accountants could have by using a boilerplate or just a generic engagement letter. I mean, there are risks that are ethical, legal, regulatory, and also commercial risks. So not all clients and client engagements are the same. I think that's pretty logical. So each engagement letter should be tailored to match the client, the service being provided, and the risks involved. So even if some clauses are essentially the same, and Jill's outlined those, and there are certain requirements under APS 305, but every engagement letter should be tailored because it's not a one-size-fits-all. And some examples where, running a risk that we've seen certainly through the IPA's disciplinary process is, for example, fee disputes, disclosure, where certain things weren't disclosed to the accountant. Sometimes the accountants may not be aware of their obligations, and certain obligations are ethical and professional that they've got that relate to a particular type of engagement. So there's all sorts of different types of examples. But I would have to say that having a look at some of the disciplinary matters that go through, a lot of them, I think, could have been avoided by simply having really clear and precise and tailored engagement letters. Otherwise, you run the risk of having a lack of clarity and confusion between the parties. So, and also the other thing I would say is that any changes should also be documented. So it's not like you do an engagement letter at the beginning and that's it. So you might be asked to do more work or different type of work, and that should all be documented. And also whether it's under the same terms and conditions. It's likely that it might be, but it might not be. And I think that's a question that accountants need to ask themselves. So all of this needs to be spelt out, but also I think it's also really important to say what work is not included. So you set out what work is included, but what I find quite often with our members is that there's a lack of clarity sometimes around what is not included, and that should also be spelt out. Thanks, Rebecca.
Thanks, Vicky. I might actually stay with you as we move on to our next topic, which is around formalising that client onboarding across your firm. Now, how important does embedding onboarding into your firm culture help reduce that risk exposure?
Yeah, so it's not just about reducing risk exposure, which is, of course, is very, very important. But accounting practices should already have, as we've said at the very beginning, onboarding processes in place to meet the obligations which are imposed on accountants. So embedding the onboarding in your firm's processes should really be something that is part of the everyday way of doing business, so that it's not seen as an extra admin burden or as an extra cost. And of course, I would say that risk considerations should always be top of mind. For example, what are the red flags for a new client? And this will become more of a focus under AML. But what happens to a client's risk profile if their circumstances change? And this is part of the ongoing process and monitoring that we've talked about. Or what happens if there's a change or you take on additional designated services? So all of these questions should be factored into and be made consistent through all the processes of onboarding. And so more generally, there should be consistent processes. So especially if you have staff, so that everybody knows what those processes and systems are. And of course, they should be very well documented. Training is something that is really critical for staff as well. So accountants should be looking at if they've got staff to train them, so that the onboarding becomes very much part of the firm culture. It becomes second nature, as it were. So people know what to expect and what's expected of them. And I think this helps to build responsibility and accountability. Thanks.
Thanks, Vicky. Now, Belinda, what are the must-have components of a firm's onboarding policy, and how does this align with APS 110 and 305?
I think the number one must-have is a clear understanding of scope. Scope from both understanding of scope from both the perspective of the client and also of the practitioner. Do you, as the practitioner and the client, have the same expectations when you're entering into this relationship? And this is really an extension of some of the comments that Vicky made in particular. Now, of course, there will be the additional onboarding, practical obligations and requirements that we've touched on. But scope is so essential to make sure you're on the same page, because that will help determine whether, in fact, these services are, in fact, designated services. Whether your expectations are likely to be met, it can avoid fee disputes, it can avoid scope creep. And most importantly, in terms of the link back to APES 110, is to ensure that the principle of competence and due care is met. There is sometimes a temptation for a firm, particularly if they've had a long relationship with a client, to scope creep or to deviate from their lane, and to actually provide a service that is not an area of particular competence of theirs. So it's very important to make sure that you have a very clear understanding of what your client's expectations are, so then you can determine whether you can actually, and you have the competence to meet those expectations. And you might even find that's something you're not comfortable with. Perhaps you don't have the depth of experience in your firm, and you would actually even have to decline that particular engagement, for example. So it's ensuring you're on the same page of scope for both your own protection and also that of the client.
Thank you, Belinda. I actually had this conversation just yesterday with one of my colleagues where I ran by a scenario with them and said, Rebecca, you know this guy, yeah, but it's not really my area, and I would really prefer you to do it for me instead. And just getting very comfortable with that, saying no, I think is important. However, Jill, just to move on to you now, every high risk situation doesn't necessarily need to be a no. How can we take on these high risk clients with the appropriate safeguards?
I think Vicky and Belinda have covered it. I think it is the culture of your practice, whether you're a sole practitioner with one person aiding you or you're a firm. And it is about that engagement letter, scope and date range. So with high risk, for example, you may build into your engagement letter that we will review that engagement every 6 months, for example. So high risk means having more oversight of every sort of engagement with that client. It may be your policy that, yes, your frontline staff can onboard a potential client, but if that initial risk rating comes out as high, any further conversation has to be with the principal. It may be your policy that any activity for that client has to be overseen by the principal. Or as I've suggested, it may be that you sit with that client every 6 months and review the engagement letter. So it is possible, and you are welcome to onboard a high-risk client, providing you match that with your policies, procedures, and the culture. So understanding when a high-risk client is just doing something outside their norm, it may be an immediate review. Is this a suspicious matter? You may jump to that sort of assessment to start with. Hence the strength of policies, training, and that culture of just making that risk review just part of your mindset. Have that in the back of your mind, particularly for high-risk clients.
Thank you, Jill. Now, before we move on to the next and last section, there was a question that popped up that I might pose. Do the professional bodies have any plans to communicate additional requirements to accountants, just general knowledge in the public of the additional compliance burden? So I do understand that there are some more webinars and events coming up that the three of you are involved in and respective bodies.
That's right, and I can speak to that. The three bodies have arranged a webinar, which is in November 17th, and you can register for that actually on the CPA Australia website. But if you're a member of CPA ANZ or IPA, you may have already received a communication about it, because this is a joint initiative, and we have two senior educators from Austrac who will be speaking to where the extended regime is at the moment in terms of what the Act and the substantial amendment to the Act, which, as you know, comes into force next year but was passed last year. The rules, which is subordinate legislation, which has recently been finalised, and also, as I think Jill has touched on, substantial guidance and support, which is coming out from Austrac shortly, including what's called a starter kit, which is a really good place to begin in terms of your policies and processes, risk assessment, and all the necessary tools, particularly designed for sole practitioners and very small firms. Now, we are, as I said, jointly presenting this on the 17th of November, but don't forget, Austrac themselves also has a lot of resources, so I would encourage you to look on their website as well.
Great. Thank you, Belinda. Now moving on to managing scope, and I'm going to stay with you, Belinda, because you did talk about what happens when we get out of scope in our engagement and with what we'd agreed upon with our clients. So what sort of risks can appear if the work that I originally agreed to do for my client has greatly moved, particularly because this has been a client I've had for a long time, but I haven't formalized that with them?
Yes, and this is where things can get very unpleasant with a client, and you can find yourself having very awkward conversations and even entering into fee disputes, sometimes even going as far as perhaps some legal challenges potentially. Your insurer is not going to be happy if you attempt to charge for services which haven't been agreed upon because they're out of scope. You might even find yourself facing a claim of negligence, potentially. So it is very, very unwise. It's quite apart from just the unpleasantness of difficulties with the clients, you can actually find yourself in a very sticky position in terms of your insurance, also with regulators, perhaps with your membership body. And of course, it's a direct violation of fundamental principles of APES 110.
Thank you, Belinda. That makes it very, very clear. Jill, how should we as accountants evidence our scope changes to remain compliant with 110 and any other obligations we have?
Well, I think as Belinda touched on, that already exists, and key is in writing, and key is getting the client to acknowledge their understanding of the change. I think the addition of AML CTF and the ongoing monitoring aspect is that designated service. So it may be you have an existing client that already has a company, but they're for some reason setting up a second company. They may be in agriculture and now they'd like to set up a bakery because they grow wheat and they've learned how to bake bread. So even though they have a company and they're an existing client, the fact they're setting up a company post the 1st of July, technically that's a new designated service. So that in itself should trigger you to look at the scope, and it may already be covered, but it will require you to do that risk assessment, which is new. So you may not have done that already. So again, that's the scope, that's the engagement letter. We're now going to do a risk assessment. You can be upfront with your client about that. And again, recording what that risk assessment is, entering into a new engagement letter may be required. And again, it may change the terms, it may change the period of time, and just resetting that under the AML CTF requirements.
Thank you, Jill. And Vicky, just to close out a little bit more on what Jill mentioned, so she's spoken about some of those events that will occur where we have to re-engage our clients. What about the rest of our clients who effectively we're just pottering along still doing the same thing for? Should we be reviewing their ongoing engagements as well?
Yeah, I would say that it's definitely good practice to regularly review the engagements. I know when I was in practice, you rate all your clients and you put them into a certain system so that you're reviewing them according to the type of work that you're doing, and it comes up automatically. And I think having automated processes as much as possible really, really makes a difference. So, and scope drift and scope creep are really, really quite common. I mean, it would not be unusual for a lot of tax agents. They've done the tax work for a client, and next thing you know, they get asked 20 questions that might involve research and inquiries and more documents. And the client might expect that that's all included, but it's actually a lot of extra work. And unless it's made explicitly clear to the client that no, that all that extra stuff is not included in the initial engagement, then there's going to be confusion. And we've already talked about, problems and disputes and all sorts of stuff. So it's really important that before you start the work, to document any changes, any additional work that might be needed to really try and limit the scope creep. And, it really depends on the client and the work, whether you review it, monthly, 6 monthly, quarterly, annually. It really, really depends. Or it might be when there's a certain trigger point. Like if you find you're suddenly doing, or over time, you might be doing a lot more work for someone, for a particular client, and you're thinking, oh, well, there's a lot of extra work that I'm not billing for and that the client's not expecting to be billed for. So before you get to that point, you should be reviewing. So, and I would suggest that having a regular scope review built into the terms of engagement is really, really a good idea, because then clients know what's coming and they know what to expect, and everyone can be on the same page. So I think that's really, really important. And I would really stress that having some level of automation, and it doesn't necessarily need to be high tech, but just having those systems and processes built in really makes a difference to how efficiently you can run your practice. including for sole practitioners. Like, I was a sole practitioner for a long time, and if I didn't have my systems and processes in place, it would have been really, really hard to do the work that you need to be doing. And also, you know, you're in business for commercial reasons as well. So I think it's really important to keep all of that in mind. And can I just add, I just tried to answer very, very briefly some of the questions that were coming through the chat. So I think there seems to be a lot of concern amongst accountants, and rightly so, that there's an extra admin burden with all of the AML, and we've gone through TASA and privacy reforms, and there's so much change happening. Thanks.
Thank you, Vicky, and thanks for jumping in and answering those questions. If there are other questions that float up, I will share it with the panel after the webinar. And that brings us to a conclusion on this part. I'd love to thank all the speakers for giving up your valuable time. That was very, very educating and made it a lot clearer that I need to get moving right now and not wait till the last minute. Thank you. Now, before I let you all go, I just wanted to let everyone know that we do have another webinar that will be held on Thursday at 11 a.m, which is tomorrow, Compliance in Action, Engagements Made Easy. If you'd like to dive in and understand in more detail how Ignition can help you comply with a lot of those items that we've just heard the lady speak about today, please sign up, one-click registration on the screen. And without any further ado, I'd love to introduce everybody to Ethan Cooney, who will be running us through a quick demo of Ignition if you can't make tomorrow's webinar, so you can understand how that technology that Vicky also touched on can actually make this admin burden a lot less burdensome.
Thanks, Beck. Just making sure you can hear me okay. Excellent.
Absolutely.
Excellent discussion. Thank you again to the panelists, Belinda, Jill, and Vicky. Really, really valuable, and more information to come there. So appreciate the professional bodies coming on this session and providing us with some clarity, and also the follow-up sessions that were mentioned as well. Just by way of brief introduction, as Beck said, my name's Ethan. I've been working here at Ignition for the last 7 years exclusively with public practices, and just wanted to showcase today and mention a few things around AML and the upcoming requirements, and then also just re-emphasize some of the partnerships that we do have with these professional bodies to help make compliance around your engagement process easier. So for those, I noticed at the start of the webinar today that there are quite a number of you who are already using Ignition in your practice, and these components would be familiar to you, but these are the areas in which Ignition looks to solve for currently for over 8,500 firms globally. And everything you can see here from capturing and qualifying opportunities and leads through to managing your sales pipeline, the sending of proposals and contracts and terms of engagement that are compliant, and then managing the ongoing scope of those agreements and collecting your fees for you as well to help you better manage cash flow and reduce debtors. So we are really excited to be hosting this session today, and obviously what Ignition does solve for ties really closely into what has been discussed today. So my goal was to just show you a couple of areas where Ignition can help you with compliance around this. There's been a lot of comment in the chat, which I think is very relevant, that this is an increased compliance burden, particularly on smaller firms and sole practitioners. Just want to acknowledge that, although it will be an extra requirement, there are some ways that we can make this more efficient, and there are some ways that we can look at charging for some of this extra time as well. And I'm keen to share some insights with you around how other firms are doing that. So just to give you a brief overview of what the engagement process looks like through Ignition, we tie together the outline of scope and fee schedule with an updated and compliant term of engagement that's all signed as part of the onboarding process for a new client, but also then signed again as part of a renewal for existing clients as well. So this is something that we promote as being a core part of your annual review with all of your clients. I think Vicky termed it a rescoping process, and that's what we would encourage all of our customers and those who are listening to take part in, and reassess the services that you're providing, how much you're charging for those services, and whether there are any additional services that need to be bundled in to the agreement and billed for and scoped out as well. So you can see here just a sort of 6-step process here that the clients would go through. You've got the opportunity to make this look really professional and engaging for your clients. You can have an outline of the services that are provided. And I just wanted to give you a couple of tips here in terms of what we've seen some firms do, and that is around the management of out-of-scope work. So you can actually include a specific service within your engagement here that determines how you handle work that is not outlined in that proposal. This is something that we don't see too many firms doing, and it does provide you with a way to, I guess, go back to this and say, look, we did actually agree on an hourly rate for work that was over and above what was originally quoted. Here's where it is, here's what you signed, etc. In addition to that out-of-scope service line, I've started to see firms actually include an onboarding fee. So the time spent in doing the research, particularly around AML, and this is referencing the customers that we have in the UK and in New Zealand, actually putting in a separate line item that is charging for this time spent on onboarding as well, so that it's not fully unrecoverable for you all. So just wanted to highlight that there are ways and methods of capturing that value within the engagement here. Ignition gives you the ability to then present add-on or optional services to your clients. If you're wanting to offer additional services such as maybe tax planning or some advisory work on top of the general compliance work, it's a great way to enable clients to opt in for those. And just to highlight, we have a whole host of templates, over 50 of them actually, that you can utilize to really get started with these quite simply. We then help you to disclose all of the fees here. So again, helping you to remain compliant with Section 45 of that Tax Agent Services Act here around disclosure, keeping your clients informed, all of these areas that Ignition really does help you to get in front of your clients simply. So you can see a breakdown here of all the services and when they're being charged. I've got a mix of fixed fee and also hourly charge out rates displayed here, but I could do things like present a fee estimate or a fee range, or present a minimum fee, or take a deposit for work with a balance on completion. It's a very flexible billing model there, along with the minimum fee over the course of the year. There's also the opportunity here to collect payments. This is a big differentiator of Ignition, and you can actually get clients to put in their payment methods up front when they're signing the agreement. This is quite unique to Ignition, and we enable you to actually ask your clients and say, hey, look, for ease of future payments, do you want to save your card or direct debit details here in the proposal? And we can direct debit or charge your card on completion of the work or upfront, depending on your billing model. Finally, this is where the engagement terms are largely automated for you. So Ignition comes out of the box with a whole host of templates here. And the great thing about these templates is that you don't have to go in and manually edit them every time. You simply set up the template once and select that template when engaging a client or re-engaging existing clients. And Ignition will pre-populate all the information around that client. So their name, address, the relevant signatories for that proposal, the fee schedule, all the services that are included, all the relevant terms and conditions. To Vicky's point, not every engagement is created equal, so it will be customized depending on what you've included in the scope of that proposal. And just to highlight, we have partnered with many professional bodies, certainly the three that were on the webinar today, the CPA and IPA, to provide their latest set of compliant engagement letter terms within Ignition as well, which you can utilize. And again, without you having to go in and manually control, find and replace, or edit or adjust those engagement letters every time. So if you're a customer of Ignition and you don't yet have those templates and you would like access to them, please feel free to click on the button on screen, or if you're not yet a customer, likewise, feel free to click on the button here, and we'd be more than happy to get in touch with you and make sure that you have those up-to-date templates available in your accounts. I'll just show you here a quick example of that, but under templates in terms, you can see on screen just all of the engagement terms that I do have available here within this demo account. There's actually quite a few more there that we have that are not on my screen at the moment, but you can see they've been updated to be compliant with the 2025 TASA requirements as well. In addition to those engagement letters, we do have a whole host of proposal templates as well, which you can leverage, again, helping you with just being really clear with your clients as to what's included and what isn't included in the scope of your agreements. Now, I just wanted to show you one thing here in terms of ongoing management of scope. It did come up during the panel discussion today that we should be reviewing this annually. So what does this look like to review an annual agreement with a client? Very simply, I can at any point go in and look at my proposals that have been accepted by the client. I can actually go into that client specifically and find all of the agreed services. I can find all of the communications back and forth with that client around what they've signed. I can look at the billing schedule, so what's coming up for bill next. I can look at all their invoices and also any jobs in relation to that client as well. And I do have the opportunity to actually bill that client for additional work, what we call an instant bill. And if this is a service that doesn't necessarily warrant a new engagement, but it does warrant notifying the client, perhaps an accountant's letter or evaluation or something similar, Ignition does give you the ability to bill for that work very quickly. So just using this little interface here and notify the client automatically of their new service with you. And so if you don't necessarily need sign off from the client to complete this once-off or ad hoc piece of work, you can still notify them through this mechanism and still have a log and a record that they have asked and or agreed for it, and have that all signed off within Ignition here as well. So I can, in just the 10 seconds that it took me there while I was explaining it, I've gone and billed for that work, notified the client, Ignition has raised the invoice, it'll mark that invoice as paid once the payment has been collected, all automatically for me. In terms of our annual renewals then, Ignition also enables you to really easily roll over these agreements year over year. So I can have a look at all my current active proposals, find those that are expiring soon, and then I can go through a process of doing a renewal. This is an excellent way, per the recommendation from the panel today, to do your ongoing scope management. So what I might do initially is start with a price increase. So I'm going to start with a 5% price increase across all of those agreements. I'm then going to look at each of the different service lines here. I can adjust each of those service lines manually if I want to increase them a little bit more, or I can bring them down, create those proposals, and then what Ignition will do in the background is actually update and create those renewal proposals for the next period. So the next financial year, the next calendar year, whatever your cadence is of renewal, and it will actually create that as a draft, which I can then mark for review if I want as well. What I'm then able to do is just go into that proposal before it's sent, so it's all ready to go straight off the bat with that price increase included. But if I wanted to go in and just double check the services that are being offered, see if I wanted to adjust anything, remove anything, it's really simple here. I can either remove a service, I could go in and add another service if I wanted to as well. And then really excited to also announce at this point that you can validate or verify your pricing for this service as well using Ignition's latest Price Insight feature. And this enables you to run an analysis, which is an AI-backed pricing analysis on that service, comparing it to other services that clients have accepted and what they are paying for that particular service. So I can add additional context to this to say, perhaps I'm a sole practitioner, or I live in a regional town, or I position my services as being premium and I charge that way as well. And then I can basically analyze that price through Ignition, and it will give me some reasoning and some background and a recommended price bracket for that particular service as well, which is a really cool. So this was only launched very recently. If you're a customer of Ignition, you have access to up to 3 of these as a free trial as well, which I'd encourage you to go and check out in your account if you haven't yet done so. And so what Ignition's going to do there is run this analysis, give me my reasoning there, which you can see. It's comparing 9 direct comparable services, and it's giving me a range that I could consider billing for that service as well. So at the moment, I am on the lower end of that suggested range. I can use the suggested pricing, or I could retain my own pricing for that service as well. So hopefully that is clear there. Okay, that's largely everything I wanted to share with you today. Hopefully that's given you some clarity around how Ignition is helping support the engagement process with your engagement letters. A great question from Kathy in the chat around supporting the AML process specifically. Yes, there are plans and we are currently investigating that. So please do keep an eye on Ignition's radar and comms around supporting the AML process for you. We are very conscious that this is quickly coming upon us in the middle of next year in July, and we are aiming to have a solution in place for you to be able to accommodate for all these new requirements, and hopefully again make the compliance burden a little bit easier for you as we head into this new round of legislation that we all have to take into account now. So hopefully that's been helpful in just giving you a really good understanding of how Ignition can better support compliance in your engagements, help you manage your cash flow, and then also save your time on your re-engagements as well. Please do stay in touch with us. If you'd like us to give you a call and you're keen to learn more about how this could work for your firm, please feel free to fill in the poll that's on screen today. You should be able to see it on the right-hand side of your monitor there. If you would like us to send you a link to a free trial so you can check out all of this for yourself, including the templates that I mentioned, please vote on that middle option there, and we'd be more than happy to send you that trial link. Or if you'd like us to sign you up for that webinar that's coming soon, where you can get a more in-depth demo of how Ignition works, feel free to respond to that third poll there as well. Finally, I just wanted to say thank you again to the panelists, to Beck for hosting, and to all of you for attending today, and we look forward to seeing you on the next webinar. Bye for now. Have a good afternoon.